If you are a move-up buyer, downsizer, or investor trying to read the market, you're not alone. There's a lot happening in the market. So in this episode, I'm going to break it down into 4 parts. What's happening in the national market? What's happening nationally? What's going on in New Jersey? How's West Windsor doing? And finally, what's likely to happen in the second half of 2025? Hi, it's Nicole, a local realtor helping people buying and selling real estate in the greater Princeton market. Now let's start with the national level. So this map prepared by Resi Club shows us the difference in inventory between May 24 and May 25. As you can see, the places with the darker green area, those are the places where has the most increase in inventory, whereas the places with lighter area. And here's New Jersey, so in the central and the northern part, we're still having a restricted supply of houses. This is just a different way to help us understand the current inventory level at the national level in the nation. So this is a different graph that help us understand the current inventory level in the entire country. Right now we're here, so we're close to 29% more inventory than last year. And we have, as far as this period of time is concerned, our inventory level is higher than that in the past 5 years. However, we're still not up to the pre-pandemic level. 2019 is the last normal year before the pandemic. So when we do our comparison, we like to include that year's data so that we have a reference point to know where we are right now relative to the pre-pandemic market condition. Well, we're having more houses on the market, but we are seeing many homes are experiencing price reduction. And so far, there are about 40% of single-family homes on the market have had price reduction. And that's the highest share of price reduction for this time of the year since 2022. To simply put, houses are sitting on the market for a longer time, and the sellers are slowly adjusting their expectations. That's a typical sign of a softening demand. Pending sales tell a similar story. Right now, we're hovering around slightly under 400,000 homes in contract nationwide, and nearly identical to last summer, but still way below the 2022 level here. So what it tells us is that there's activity, but not explosive. Buyers now have more choices, they're taking longer time and being more selective and more cautious. At the same time, buyers' interest rate fatigue is real. Now let's take a look at the price. Last year, nationally, home prices are still going up, although at a slower pace. So last year, home values went up by 3% nationwide. And then that's down from 6.6% we saw the previous year. And also, what's worth noting is that the pace at which the price appreciates varies dramatically by region. For instance, Middle Atlantic, which includes New Jersey, had a price appreciation of 7.4%. That's strong. However, that's a step down from the 9.1% the previous year. At the same time, South Atlantic and the mountain regions saw significant slowdown in price appreciation, dipping to under 2% in those areas. So overall, prices are not crashing. It's just that the momentum is cooling, especially in overheated market. Now let's take a look at the data for New Jersey from May. Let's see what they mean if you're thinking about buying or selling. Similar to the national trend, and the inventory level is going up from the last year. So in fact there's a 19.3% increase in the inventory level statewide and year over year. And now we're back to the pre 23 levels, and more listings equals to more choices. That's especially welcoming news for buyers who felt they were boxed out in the ultra-tight market back in 2023. Pending sales went up by 1.9%, and that's a modest gain. But what's more telling is the stabilization we're seeing after a sharp drop from 2022. So from 23, 24, 25, and then this level has been gradually growing. And next one is closed sales are improving too, went up by 0.8%. After a steep drop from 22 to 23, that was a 22% drop. Now, ever since then, it has been gradually going up, right? And then this reinforces the idea that while demand is soft compared to the pre-2023 level, and we're not in a free fall, it is a slow, steady recalibration. Median price growth, as you can see from this graph, price growth has become hyper-local. Some counties are having double-digit appreciation, such as Salem, 15.5%, and Mercer, 10.6%, and here, Cape May County, 10.4%. Others are declining. This signals that we're returning to the fundamentals. Buyers are more price sensitive, and the homes are dated, overpriced, and with a poor location are going to sit on the market much longer and oftentimes get sold for below the asking prices. So bottom line is, the market in May is showing sign of a normalization. Inventory is back, demand but more discerning. Prices are adjusting in pockets. Still have leverage if they're smart with their price. And finally, price growth has become hyper-local. Moving on to the local market, let's use the news data to see how West Windsor market has been doing. So similar to the national trend, and the inventory level in West Windsor has also gone up. And we ended June with 67 homes available for sale. And that's the highest June inventory we've seen since 2020. And that's almost nearly double the 35 homes available this time last year. This is a big deal. Between 22 and 24, tight inventory has created fierce competition. And finally, now buyers have a breathing room and more leverage. The average days on market went up to 22 days from 13 days. This doesn't mean the market collapsed. It just means that buyers are more cautious, and homes need to be priced right and presented well in order to attract. Median list price for June was $887,000, while the median sold price came in at $770,000. That's a $117,000 spread, a clear sign that some listings were overreaching. Compare this to last year's list and sold price. The difference was merely $55,000. That tells us the market is punishing against overpricing. So what this tells us is that the market is pushing back against aggressive pricing. So here's what happened in June in West Windsor. 38 homes were listed, and 28 pended, and 25 sold. The fact that there are more homes hitting the market than going under contract is telling us that we're entering a build-up phase. Expect inventory to continue rising throughout the summer season if the absorption doesn't speed up. Right now, West Windsor's months of supply is sitting at 2.2 months. It was 1.6 months last year and 1.5 back in 2022. This is still technically a seller's market, although it is transitioning towards a neutral territory. So takeaway, if you're a seller, you no longer have the upper hand by default. If you're a buyer, you are gaining leverage by having more choices. To recap, inventory is climbing. Homes are selling longer, overpricing is being punished, and buyers are active but picky. So if you're selling this summer, it's all about pricing, it's all about strategy and presentation. Price competitively, stage thoughtfully, and market intentionally are the keys to success. If you are buying, this is one of the best windows we have had seen in years. More listings and less pressure. To sum up, nationally the market is cooling but not crashing. New Jersey is still overperforming but growing at a slower pace. And locally, strategy matters more than ever. So, with that information in mind, let's see what's likely to happen during the second half. So I'm breaking down the latest mortgage rate forecast, home price trends, and sales projection so you can move forward confidently, whether you are buying, selling, or simply watching the market. Let's dive in. As of late June, the average 30-year fixed mortgage rate is around 6.8%. And according to Freddie Mac, that's still elevated, but there's good news. Fannie Mae forecasts the rate to drop to 6.3% by the end of 2025, and further easing to 6.2% by the end of 2023, by the end of 2026. So while rates are not coming down as quickly as we have hoped for, we're heading in the right direction. The days of 3% mortgage rate is not coming back anytime soon, but stability matters just as much. And that's exactly what we're seeing right now. Home sales. We're starting to see signs of recovery in existing home sales. NAR projects 6.6%. Fannie Mae expect 4.4%. And Zillow is more on the cautious side, expecting 1.4% growth. Sellers who price realistically will attract buyers, especially in high-demand towns and school districts. No one is predicting a return of 2021's crazy market. Home price growth is going to slow. Most analysts expect home price to grow more slowly in the second half. Fannie Mae expect 4.1%, NAR expect 3%, and Zillow is the outlier that predicting a decline with a negative 1.4%. So what does that mean? In premium market like Princeton or West Windsor, homes in great condition are still commanding strong prices, but overpricing not getting a pass anymore. Expect a regional divergence. While some areas will cool, but other areas will continue to appreciate. So if you are a buyer, you've got more homes, you got more inventory to choose from than last year, and rates may tick down. Rates may tick down, and the competition is still out there. If you are a seller, be strategic with pricing and prepare your home to stand out. And finally, although the buyer pool is smaller, the buyers out there are serious. So for final thoughts, the second half of 2025 will likely be defined as a stabilization, not spikes. But pay attention to the movement of the mortgage rate. If there are enough rate cuts, will bring buyers back to the market from the sideline and motivate homeowners to sell and then buy. Either it's upsize or downsize. So if you'd like to talk through your goals or have a custom personalized strategy for your particular situation, let's connect. Thank you for watching. Make sure to like, subscribe, and share this video if you know anyone might benefit from the content. Until next time, take care.